Welcome to Wealth Made Simple with Shaz, where you'll learn how to master your money through business, property and tax saving strategies. Your host has collectively helped his clients make tens of millions of pounds in additional profits through these strategic approaches to business. Introducing Shaz Nawaz, an award-winning chartered accountant, property tax expert, entrepreneur and property investor.
Capital Allowances, SA, HMO. Whose question was that? Okay, any particular point?
I just want to know, are there any differences from a HMO and an SA?
Okay, so has anybody ever claimed any capital allowances on any property? Nobody? Oh, you have? You have, Faris?
In the process.
For service accommodation? You're okay? HMO. You have? Okay. And how long ago was it?
Actually, I'm a client of AA Accountant, so by AA Accountant last year, yes.
Okay, fine. So, for service accommodation, you'll have a much bigger claim. For HMOs, it's a very, very small claim. Usually isn't worth doing though, okay? Because you only claim for the common communal areas, and even then there's some stuff going through the tribunals which limits it. But for service accommodation, well worth doing. So I'm not going to go down this particular path this morning either, but if you followed the budget last week or early this week, the Chancellor's extended the annual investment allowance because it was £1 million coming down to £200,000, and then he's given a 3-year allowance for us to claim all the expenditure we make on investments. So for service accommodation purposes, that's really good news. So all the expenditure that you incur, you can reclaim quickly. So just a very quick example, we're buying this particular property here. Faris, what do you think may qualify for capital allowances in this building? One item. Lighting. Sharon, an item in this room here which may qualify for capital allowances?
Lighting.
Yeah. You were paying attention, weren't you?
I was doing a post on you. I was saying how brilliant you were. Doors.
That's very useful, by the way.
Yeah, doors.
Yeah, doors. Anything else? Have a go.
Yeah, all fixtures.
Anything fixed to the property, okay?
Windows.
Capital allowances, no. Afraid not.
All the electronics.
Because anything fixed to a building which is an inherent part of the building.
Right.
Okay? So when you're buying a property, just again, as an important note for you and everybody else, make sure you find out if the previous person has claimed all the capital allowances. Now, do we have any lawyers in the house by any chance? Sumeda, are you a lawyer? You are? Do you specialize in property by any chance? Okay, good. You're one of the good ones then, by the way. There's a question, okay, on what's called the form questionnaire CPSE, Commercial Property Standard Inquiries. Question number 30-something. Okay, let's call it 38. I don't remember the number. And it says, it asks about capital allowances. What do most solicitors put as an answer to that question in terms of capital allowances? 0, nil, NA. You don't want that. You want to make sure you can negotiate with the seller to see what capital allowances you can claim. Because the good news for you is you've got 2 bites at the cherry. First one is when you buy a property, claim some capital allowances, okay? Then when you refurbish the property, you've got further capital allowances. Okay, the annual investment allowance and this new allowance that the Chancellor's given you is only on new equipment. So for the old stuff, you can only claim a certain percentage over a number of years. But you want to make sure you do that. So capital allowances are really good. You can write off your tax against profit. And I might talk about it quickly when we look at the LLP Hybrid.
So when you go and view a property, you know what you want to do with it. If you employ a capital allowances surveyor right at the beginning,
Yes.
is it worthwhile? And do they save you a lot of time? Do they tell you what to do?
Yeah.
So it's worthwhile.
Yeah, because quite a few people have a claim but can't make a claim for the existing items in a property because on the CPSE it was said there's no capital allowances.
So if they've already got it but it's out of date, like 1980 stuff, and you need to replace it, that counts as...
That's perfect.
Even though it was working?
That's perfect, yeah. Yeah. And remember, even when you're buying a property and there's a lot of crap in the property, using Roy's example in terms of taking it back to brick, well, make the claim And when you strip the stuff out, you're going to write it all off in the year that you strip it out, as opposed to, like I said, you claim a small amount every single year. Yeah, so it benefits you hugely. Sharon?
So if you apply the principle, not fit for purpose, for whatever's there,
Yeah.
and you'll start that will easily enable you to identify from the start.
Yeah, but if you've made a claim, okay, so let's say you're buying a property for 500 grand. Yeah, so we'll do this in two bits. Can everybody see that?
Yeah.
Just about? Okay, good. So, and then you, Sharon, established you've got 100 grand worth of capital allowances in your existing property. You then strip out that property because you're going to do major works to it, and then you've spent another, let's say, 300 grand, and from that 300 grand, you've got 150 grand worth of capital allowances. In your first year, let's say you've made 100 grand profit. If you didn't strip out these items here, depending on which pool they go into, and we're not going to go down that route, okay, if it's plant and machinery, you claim 18%. So 18% of 100 grand gives you 18 grand. So you'd have 82,000 pounds of profit you pay tax on. Don't worry if you're not following, just all you need to understand is the principle. However, because Sharon's stripped out the property, this stuff here has zero value. So in the first year, over here, Sharon says, I've lost the entire 100 grand. So Sharon has 100,000 pounds that she's lost in value, therefore she's got no profit, she pays no tax. She's still got the 150 grand to carry forward and claim against future year profits. Okay, without boring you too much, all you need to remember is claim capital allowances or try to claim capital allowances when you buy a property, and then when you refurbish, make sure you've got a claim there too. Hi.
Hi. So,
in the terms of negotiation, when you're putting a bid in for a property, one should then probably say that this offer is on the basis that no capital allowance.
Absolutely, so that's a very good point. So when you have the heads of terms in there, make sure you add in that there's some negotiation on capital allowances. If you don't, they'll say, because when things go wrong, generally speaking, they say, let's go back to the heads of terms. Most heads of terms usually, what do they contain? Name of buyer, name of seller, lawyer, property, that's it. There's no other terms. If you agree terms, always make sure they are in the heads of terms. And the capital allowances would be a good one.
so I was just going to ask, on that 100k you talk about rip out, what if it's just doing some additional work to the property as well? Is that included? So, for example, if the garden's not fit for purpose and you need to do some work to make it fit for purpose, can you include that in the 100k, for example, the cost?
So the 100k is what you get when you buy the property. So you and I buy this property here,
Yeah.
there's 100 grand worth of equipment items here, okay?
Okay, it wasn't the cost of the work.
No,
Okay.
no, it's what you actually stripped out,
Okay.
okay?
Sorry, stupid question, sorry. So I know when you say I'm going to be capital allowance, is that on commercial or is that on resi as well?
Only on commercial property
Yeah.
and service accommodation,
Yeah, okay, yeah, no. I just wanted that.
yeah? A very small amount on HMOs usually isn't worth doing,
Yeah,
usually isn't worth doing.
I was getting excited there, man.
While we're on the subject of...
And that's because you have to have a trading element to your business to claim capital allowances. And if you buy and hold property, it's investment, therefore no capital allowances, yeah?
While we're on the subject of SAs, rent to SAs, can you just give some detail about who could claim the capital allowances back? I'm assuming it's the owner, not...
No, whoever spends the money.
Okay.
So if you spend the money, you can have allowances.
I have the same question. That's what I call even you can claim capital allowances and fixtures, and if you had made a new kitchen
Yeah.
or but for some reason it's not a new kitchen.
Yeah. So simple. Whoever spends the money claims the capital allowances. Okay. So
Sorry, same question on rent to SA, but what about section 24? Who claims that?
section
Yeah.
in terms of capital allowances.
No, so section 24 tax.
Yeah.
So it's the owner who would claim that back, right? If it's in their personal name still.
No.
Even if it's rent to SA.
Now, if it's rent to SA, okay, the owner is stuffed basically because he has an investment business, because because you're paying him or her rent, you're paying them rent.
Yeah.
So Section 24 affects them. If you're running the SA units, as long as you meet the rules, Section 24 doesn't affect you.
Okay.
If you go into a JV type of arrangement,
Yeah.
where you do profit sharing, then he or she may be okay.
Got it.
Okay? Okay, happy with that, my friend?
Yes, thank you.
Sorted, so we've done that. Trading and investment, we've covered. Anybody? Sorry? Yep.
So with the offering, this is offered on the basis that no capital have been paid. Now then, how do we get that verified? Are you looking for that to be verified by their accountant, they might not have one, or by their lawyer on transfer?
So your solicitor will ask their solicitor. They then ask their client's accountant. If the accountant doesn't have a number, they'll have to work something out between them. If they can't, you then get a capital allowances person, as Sharon said, involved, and they'll assist with that. But usually, more often than not, they'll have an accountant, more often than not. And if they don't, we can help them get to the answer.
Thanks for listening to Wealth Made Simple. You can follow and contact Shaz on the Facebook pages Entrust Property Tax and The Profits Wizard. You can also find Shaz on LinkedIn, YouTube and Instagram. Alternatively, email him at shaz@aa-accountants.co.uk. Build your wealth by mastering money.